Hey everybody, Smart Silver Stacker here. Yesterday, gold came within $11 of hitting an all-time record high. The gold spot price rose as high as $2,078 in intraday trading, just shy of the all-time intraday high for gold of $2,089, which the yellow metal hit back on August 7th of 2020. Silver also powered much higher yesterday. It was up over 5% on the highs, trading above $27. And now, at the time I'm recording this video, gold and silver have both pulled back off the highs. Gold is back under $2,000 and silver is in the $26 range. Things are so volatile in this market though that by the time you see this, that may well have changed. And it's not unusual to see a sell-off like the one that we're getting at the open today after such a big run up like we got yesterday. With gold getting within striking distance of its all-time high, no doubt a lot of investors and traders decided to take profits, and so a consolidation at this point is pretty normal and pretty healthy. And I doubt that it'll last very long. It'll probably provide a good entry point for both metals. I will say that one possible scenario to look out for is that if there is some kind of ceasefire in Ukraine, or if it begins to look like the two sides will reach some kind of peaceful compromise, then we will probably see another pullback in commodities on that news, and that will really present a good opportunity for anyone wanting to enter the sector. But that's certainly not guaranteed, and we may still see hostilities escalate, and there's also no guarantee that the sanctions that are in place are going to be lifted just because the kinetic portion of this conflict ends. And that's not even considering the possibility of a Taiwan invasion by China, which seems to be increasingly possible. My point is, there's still plenty of geopolitical instability out there, even if we get a peace in Ukraine. So I wouldn't necessarily wait for that news or that pullback if you're thinking about buying some precious metals. Of course, none of the content in this video is investment advice. I'm not a financial advisor. I'm just a guy on YouTube. So always do your own due diligence. But as for me, at this point, I am viewing pullbacks in the metals like this one that we are having today as a buying opportunity. And this one might be the last one that we get for a while. The reason I say that is none of the fundamentals have really changed. We've still got massive amounts of fiat currency being created with record low interest rates. We've still got a war in Eastern Europe. And now the US is sanctioning Russian oil exports. So I'd expect commodities and energy to both resume their bull run shortly, after a period of consolidation. Keep in mind that even with today's pullback, gold is still up over 10% year to date, and silver is up more than 15% for the year. And despite being up 15% year to date, silver is still really cheap at today's prices. Gold is coming within striking distance of hitting an all-time high, while silver is almost half the price of its 2011 high. So silver definitely is still the cheaper of the two metals, and that's where I will be focusing my purchases for the time being. You can see here on this chart of the gold to silver ratio that the ratio did drop a little bit on yesterday's rally, but it still has a long way to go to get down anywhere near the lows of the 2011 bull market. So that tells us two things. This bull market still has a long way to run, and also that silver is still by far the better deal between the two metals. And my favorite way to invest in silver is getting real, physical, tangible metal, the kind that I can hold in my hand. Not a paper contract, not a derivative, but real, physical, tangible silver, coins, or bars. Yesterday, we got a lesson in why that is the best way to invest in commodities with what happened in the nickel market. Initially, the nickel price began to move up last week on news of Russian sanctions. Russia produces a significant portion of world nickel supply, and demand for the metal has been rising due to its use in electric vehicle batteries. Well, that move up was enough to trigger a massive short squeeze in nickel. As shorts scrambled to close their positions, there was a vicious cycle of buyers with no sellers, and on Tuesday the price more than doubled to $100,000 per ton, far above the previous all-time high from 2007. There was even a product from Wisdom Tree Investments that got completely wiped out. Their nickel 3x daily short exchange traded commodity, so kind of like an ETF, but it's an ETC. This thing was designed to basically move inversely to the nickel price with 3x leverage. So as the price spiked, this thing was absolutely wiped out and will no longer exist as of yesterday. And as the price of nickel spiked up massively, the LME, the commodities exchange, it halted trading on nickel contracts. And as of today, it looks like trading has not resumed. So it will certainly be interesting to see how that plays out. And if you're getting some value out of this video so far, I would really appreciate it if you would give it a big thumbs up down below. And if you'd like to see more videos about gold and silver, then why not subscribe to the channel? So the lesson to take away from this situation in nickel is that when you own a paper contract on a commodity, if there's a short squeeze, you're going to get screwed. The LME halted trading to save the shorts from accruing massive losses. And naked shorting any asset is always a risky proposition because basically your potential for loss is unlimited. But to me, if whoever owned those short positions couldn't tolerate that level of risk, they shouldn't have been making those trades. And whoever owns the longs should be rewarded for taking the positions they took. But the LME doesn't see it that way, I guess, so longs and nickel are currently unable to realize the profits that are rightfully theirs, and the shorts have been saved from that runaway short squeeze. And this story is just another example of the old adage, if you don't hold it, you don't own it. Another takeaway from this story is it highlights just how many shorts are out there in the metals markets, and how much price suppression there really is. And silver investors should be paying attention to this because there is absolutely the possibility of seeing a similar short squeeze in the silver market. And if that does happen, you do not want to be holding paper silver. You want the real thing. You don't want to be holding the SLV ETF. You don't want to be holding futures contracts. What you want is real, physical, tangible metal. Because if the LME will change the rules on nickel investors at the last second, guaranteed they'll do the same thing to silver investors. And that's why I want to be a silver stacker. I want to be my own central bank. I don't want to hold paper assets with counterparty risk because clearly, in the event that a trade on a commodity works out, you don't want anyone having the power to change the rules and stop you from selling or stop you from taking delivery of the underlying asset. Much better to hold it yourself, and then if you ever want to sell, that's between you and the buyer. Nobody else needs to be involved. Now, that isn't to say that there's not a place for paper assets for silver investors. There are good paper assets out there related to silver. Some of the miners, for example, they're productive companies, they produce metal, they add value. There's a lot of good things about stocks compared to bullion. Physical silver bullion has no yield. There's lots of gold and silver miners out there that are cheap today, and they pay a dividend. So diversification is not a bad thing. But that being said, I would much rather hold physical metal and no stocks than hold stocks and no physical metal. It's like a hierarchy of risk. Only physical metals have no counterparty risk. So you want to hold some of those like an insurance policy. And then if you want to take some additional risk in the hopes of greater gains, that's fine. But you always do run the risk of getting your paper assets frozen or lost. Just look at what's going on inside of Russia right now. They're having bank runs, their stock market is frozen and collapsed, their currency is devaluing rapidly. So who has managed to maintain their buying power in Russia? Do you think people there who were holding physical bullion regret that decision? I doubt that very much. I'd imagine that right now, gold and silver are the proverbial unaffordium and unobtainium inside of Russia, and anyone holding them probably just saw their purchasing power increase drastically, at least for whatever goods are still available. If you've seen some of the videos I put out over the past week about the rising prices in nickel and copper, you've heard me tell you what a great deal US nickel coins are right now as a form of physical bullion, as their melt value is now significantly higher than their face value. But the thing about US nickels is they're only 25% nickel, so it's not the best way to get direct exposure to the nickel price. Well, I had a viewer remind me of another great industrial metal bullion coin yesterday. Mr. Borat Wow left this comment. I'm stacking nickels. Here in Canada, a pre-1982 nickel is 99.9% nickel and worth 22 cents Canadian each. I bought over $200 in nickels today to find these pre-1982 nickels. And I had kind of forgotten about these pure nickel Canadian coins. I have a few of these that I've come across over the years by buying up lots of foreign coins at yard sales and estate sales and the like. And for anyone who's looking for a pure physical nickel bullion investment, these pre-1982 Canadian nickels are probably the best way to go. If you're looking for bars of nickel or rounds or anything like that, they're kind of hard to find and you'll be paying a tremendous premium and it's almost certainly not going to really pay off. But if you shop around on eBay or you visit some coin shops or coin shows, you'll likely be able to find some of these pre-1982 Canadian nickels for a low premium over the nickel spot price, or at least a lot lower than other nickel bullion products. Or if you live in Canada, like Mr. Borat Wow, you can just buy boxes of nickels and do some coin roll hunting for them. So, what kind of physical bullion are you stacking? Do you think there could be a short squeeze in silver like we saw in nickel? Let me know in the comments below. And if you liked this video and you'd like to see more videos like it, then check out the ones that are popping up on your screen right now. Thank you all very much for watching. Stay safe and happy stacking. I'll catch you next time. Smart Silver Stacker, out.